you can tell how convinced we are that deflation is the higher probability. And we know that's way out of consensus, and that's where we like to be. A lot of the inflation is coming from transportation, hospitality and leisure. Again, these areas of the economy are just starting to open up, and they have some pricing power. They need to recoup some of the losses from the last year, and that's what's happening. We do not believe this is going to be sustained. If we're right, there are a couple of reasons. One, businesses. I mean, this is going to be like Wile E. Coyote. Businesses are scrambling to catch up to the consumer, but the consumer's left. So Wile E. Coyote's off the cliff, and I think we're going to see a pretty serious drop in commodity prices. Now, the monetary policy side is also very interesting. The Fed, despite what everyone seems to be saying, the Fed is already starting to react. Interestingly, the money growth rate, so M2's growth, peaked in February at 27% and is now down to 18% on a year-over-year basis. I haven't seen it below the 20% range in more than a year, I think, or roughly a year. So that's very interesting. Anyone worrying about inflation will have to take note of that. 18% is still a very a rapid rate of growth, but the direction has changed unequivocally. Again, those worried about inflation have to take note. So here we have businesses scrambling, trying to build those inventories when the consumer is no longer focused on goods. That's a bit of an exaggeration, of course, just to make the point. But many wonder how we could be positive at all about Bitcoin if we're not worried about inflation.
So there, Cathie Wood explains why she thinks the opposite will happen and we will see a deflationary crash. And her logic behind it makes sense. Businesses have rushed to create inventory and goods for customers, but by now the customer has left. Recently, I had the opportunity to speak with perhaps the most famous Bitcoin investor, Michael Saylor, and I wanted to get his opinion on the topic. This question was excluded from the original interview, so this is all new footage. Make sure to stick around until the end of the video where Cathie Wood herself explains how her Bitcoin investment thesis fits into her deflation expectations. I've been watching Cathie Wood and ARK Invest, and they've been pushing this sort of story that they're expecting to see deflation over the next few months. Do you have any thoughts on that, or what they're sort of talking about over there?
If you get into the conventional, traditional investor community, they're still looking at negative yields versus CPI, and they're tracking CPI and the dollar index strength and deflation versus inflation of these baskets. And, I think that it's all short-term trader think, like they've constructed their world of synthetic metrics and like deflation measured against what? I guess commodities hyperinflated, like lumber, was way up, and now lumber's coming in. And so I guess you can say there's deflation in lumber prices, but they're all in the context of like 3-month, 6-month timeframes. If you look at over a 5 to 10 year time frame, what's very clear to me is that labor is more expensive, commodities are more expensive, every supply chain is less efficient. Most manufacturing capacity is in shorter supply. It's harder to get everything. Stocks are more expensive. Collectibles are more expensive. Bitcoin's more expensive. Tell me sort of what you're thinking, is going to be less expensive. House prices aren't going down, but maybe instead of them going up 24%, they'll go up 12%, or maybe they'll stop going up. But is that maybe you call that deflation?
Yeah, gotcha.
I guess what I would say is they're just kind of politically short-term trading their expectations of these derivatives. I just wouldn't want to get in that business. My view would be, I want to buy, I want to do you believe that assets and things are going to deflate for every quarter for 10 years running? That's deflation.
Yeah.
Okay, so if you're not willing to make a 10-year bet, then you're not really an investor.
Yeah.
You're a trader or you're a speculator. And that's what I think about all this inflation, deflation.
Michael Saylor makes a great point there, which I think helps clear up the argument. With commodities and goods and services all hyperinflating due to investor expectations, if you bring in your time horizon to be shorter, say 12 months, deflation is a reasonable bet to make. However, it's important to keep in mind the long-term trend. Are we going to see deflation quarter on quarter 10 years out? I doubt it. Now, to finish off, here's Cathie Wood making an explanation on how her Bitcoin price prediction to 500,000 fits within her deflation narrative. If there is one thing that is clear, it is that the majority of the big investors of our time agree on Bitcoin.
And then finally, I just want to, on the crypto side, address a question that we've been getting quite frequently. You can tell how convinced we are that deflation is the higher probability. And we know that's way out of consensus, and that's where we like to be. But many wonder how we could be positive at all about Bitcoin if we're not worried about inflation. Well, I think 08, 09 is a very good reason why. Why did 08, 09 almost melt the financial world down? It did so because of counterparty risk. And what we've just seen in the crypto market is really interesting. It's been cut in half, 2 trillion to 1 trillion, the ecosystem, in the last few months, just cut in half. Can you imagine what would happen if our equity prices, bond prices were cut in half in the span of a few months with all the leverage out there? I think we'd be in a counterparty risk problem again, a big mess. Maybe not as big of a mess as we were in 08, 09, because there have been some changes. But I do not believe that our financial world would withstand a 50% drop as easily as the DeFi world has. DeFi, while a lot of people who were leveraged 100 times elsewhere in the world were wiped out. I think, now I'm going to get this number wrong, it was either 86,000 or 860,000 accounts wiped out. DeFi didn't skip a beat. I don't think we could say that for the traditional financial world. And I do think that's why the shift towards DeFi, helped now by central banks moving into stable coins and legitimizing digital currencies, even though that's very different from Bitcoin. I do think we're going to accelerate further and faster into the DeFi world. And that too is very exciting. And as you know, if Bitcoin's price on a trend basis, remember, we're still a triple since last September. We may have been cut in half, but we were still a triple since last. And if the price continues to move up, what does that mean? That means increased purchasing power, which is what deflation is. So very consistent with our view of the world.